Good afternoon. Just a quick midday video for you guys. It is Thursday, August 7th, right before 1 o'clock. We're going to have a 30-year bond auction here just shortly. But I just wanted to go over today's price action and some of the dynamics that I go over at Tribeca Trade Group and in the trading room to kind of help a little bit. And this is kind of I think the value of trading with the community, having some experience, I think number one, just to kind of, so there's two concepts that I wanted to go over in this video. I was going to talk about number one, the gap up that we saw today, and also I'm going to talk about just how groups may begin to kind of change and begin to either show relative strength or relative weakness as we progress through this earnings season. And we've had certainly a lot of names reporting this week, a lot of growth names reporting this week. So number one, gap up today, right? After a day yesterday where the breadth was horrible. And, again, these are things that you're not really going to see in the price action. If you looked at the Qs yesterday, which finished up about 1%, over 1% yesterday, you're probably like, oh, wow, that must be a really strong market. Really great to see the Qs outperform like that. But if you looked under the hood yesterday, it really was because just the Mag 7 names were going up. You had, obviously, Apple was up over 5%. Amazon was up over 2% yesterday. Nvidia was up. Tesla was up yesterday. And if you looked outside of that, it's not to say that there wasn't any other names going up, but really the breadth was pretty bad. And if you looked at the RSP, which is the equally weighted S&P, that was actually down on the day where the Qs were up over 1%. So fast forward to this morning, right? We gap up again. And to me, you just kind of have to wonder. Now, I get it. There was a lot of strong earnings reports. Again, there was a lot. I was detailing this pre-market that there was a lot of names that were up over 5%. But it's also just some of these gap ups, are where you want to be selling into. It's something that, again, I go over when I see it, I say what I'm doing in my portfolio for the day. And I talked about, hey, I'm trying to sell as much as I can some things. I sold CRDO, I sold Robinhood, I sold Broadcom, which was a couple setups from this morning. So it's I know it's one of the most difficult things to do when you see a move up like this, and there's a lot of momentum. It looks like there's a lot of momentum in the market right from the get-go. But the tick index was up almost plus 1,500. That's way too extreme for the open. So it's one of the hardest things for traders to do, is to, instead of be looking to buy on the open, to be looking to sell when you've got gap ups. And if you go back to what we were doing, by the way, this is just the performance for the day, but there's no mistake about IWM just started to go lower and lower and lower. The IWM, again, opened in the green, opened up about 0.5%, and it sold off 1.4% for the day. So just a couple things I just want to show here. And let me just reshare the screen and go to charts. But take a look at SPY, and it's been climbing up like this, and it's been a little bit difficult with conquering some of the levels, hitting a little bit of overhead supply. But you go back to what I was trying to illustrate here is what we saw at the end of July, where we saw these gap ups and sell off the rest of the session, or sell off a good portion of the session. Gap up and sell off. So you just have to be mindful that it's something that I talked about a lot a week ago, or towards the end of last week, is that buying the close and selling the open, even though I don't really like to do that when we've got poor breath like we had yesterday, really works. And buying the open and trying to sell the close, like, that doesn't work over time. That's a horrible, horrible trade. So when the market gives you these gap ups like that, take them. Right, and put the money in your pocket and go for a walk. It's August. Go to the golf course. Go to the beach. Take that money and put it in your pocket. Right, and don't argue with it and think that you're going to chase momentum names on the open. So in any event, that's one thing I wanted to mention. The other thing, and I wanted to do a video just on this anyway. And again, this is a little bit of already moves. Fortinet going down 25%. That's a big move, right? So it's kind of adding injury, or what's the insult to injury to the cyber group. Very important as we're progressing through earnings season is to take a look at names that. Sorry, I'm just trying to manage something here really quickly. Take a look at what groups are doing within names, and I think that will also help you a little bit. For instance, the cyber group, right? Looking at the cyber group alone, we started to see in the beginning of July where this kind of broke down a little bit. Right, just the cyber ETF. Since then, it has not really found a stable footing. It came back, but kind of a weak bounce, only retraced about half this red candle, and then since then, it's just kind of continuing to kind of move down. And I think that will really help you to kind of look at the group, right? I know some growth traders have like their favorite names, like a RBRK is probably the most popular name on social media. But do you want to be going after that name when the overall group is weak? Now, look at this as well, and this is in TradingView, which is a nice little tool. But take a look at cyber stocks versus the over. They do belong to the tech group. So look at cyber stocks versus the overall tech group, and I think you'll find something that really kind of helps in this. Going back to April, this group was actually outperforming tech, right? When everything else wasn't doing very well, the cyber stocks were actually doing showing the most outperformance in the tech group. Since that turn in April, they have not been where you've wanted to be. They've been underperforming. So you could do this for any particular group. And I'll tell you, I'm watching some things that I find pretty interesting too, um, as we go through earning season. I've been a big fan of the aerospace group. Well, take a look at what the aerospace has been doing the last couple weeks. Now, notice we did get really overbought here in the middle of July. But since then, I don't know if that was a blow off top for the aerospace group, because since the middle of July, this group has been underperforming, and look at it underperform again today. Now, this could either be a buy the dip opportunity in the aerospace group. Again, I'm looking at this versus the overall market versus SPY, right? But if it doesn't, that may be the move that we've seen. That this group may be due for some consolidation. And if you just look at XAR, you're probably saying, it's not that bad. Things are kind of just going sideways a little bit. They're taking a break, but you want to be careful that this might be a little bit of a blow off top in this group. Now, I would point to a couple names that are going to report earnings. I think it's Rocket Labs reports today. This is going to be a very important group for a very important name for this group. If this name falls apart and breaks down, it's probably not going to be good for the whole aerospace group. Now, again, there's a lot of different groups within aerospace. There's the space names, there's the drone names, there's the more traditional aerospace and defense like Lockheed Martin and Raytheon. And Lockheed Martin is kind of an outlier because that's been outperforming for a while now. But the main thing going through earnings season is to take note of some of the changes. Some, as I've talked about, names change personalities all the time during earnings season. Some names which were great superstars for the last quarter, if they don't follow up by a good quarter, they become either dead money or what you could just commonly refer to as a dud, right? And they're probably not going to come back unless there's something else going on, unless somebody misread their quarter or people think it's a one-off. But for the most part, and again, I'm talking about averages. I'm talking about, for what we see a lot is that things will just change drastically. And then on the flip side, names that people weren't really paying attention to could become superstars for the next quarter. It really is about earnings. One other big thing too, I keep hearing this or I keep, sometimes I'll open up social media at night, and I'm not calling anybody out, but you want to pay attention to some of these market dynamics. For instance, like not you don't want to be going and saying, "Oh, geez, look at stocks go up. They really shouldn't be going up." And using your personal judgment. It's probably one of the worst things that you could do. Right? I hear about this stuff all the time too, where we're rallying on low volume. Yes, we always rally on low volume. Look at SPY over time, right? Over time, SPY and the indices, they rally on low volume, low volatility. When the VIX is low, that's the way it works. Don't get caught up into this bullshit. All right. The market goes down on high volume. That's when things can kind of change directions for you. So don't get caught up in this, oh, we shouldn't be going up anymore or whatever. Watch for subtle changes. For instance, like I've been talking about in breadth, when you start to see more names begin to show a 4 week, more names show a 4 week new low than a new high, something is changing under the hood, right? And right now we've kind of seen that a little bit. If you go to my note that I'm just kind of putting together right now, right? It's still kind of, last week we saw more new lows, right? This week we're seeing a slightly better new highs versus new lows. So we're kind of like in a middle area. Pay attention to the dynamics changing. Pay attention to the price action, not what you're feeling or not what you think or what you're emotional about. I see these emotional responses on Twitter. You have to be better than that, right? You've got to pay attention to what the market is telling you, right? So when I start to see new lows pick up, right, and if we're still moving higher, right, that's a red flag. Another thing that I'm watching very closely is tech. We've started to see, even though the Mag 7 names were super strong yesterday, there's more tech, right? And today's not a big, it's not like a big discrepancy, but I think you have 11 names in tech making a new low today and only nine names making a new high. It was worse yesterday, right? So those are subtle things to see, like, okay, is tech, which is the biggest, by far, the biggest sector in the ETF, is that making, um, is is that changing, right? Is something weakening in tech, right? All of these things, right? You want to be kind of writing down and making these observations on a day-to-day basis. Again, versus the emotional response that I see from people on Twitter, just trying to use their personal judgment about whether something should be up or should be going up or should be going down. All right, guys, that's it for now. I just wanted to kind of come out and kind of give a refresher about what it's difficult when this market gaps up. It's difficult when you're rallying on poor market breadth, right? Those are areas for me to take my foot off the accelerator, not press down like normal. Right. So I'll leave it there for now. If you like this type of commentary and if you feel like you're missing some of this, try our trading room, trybeckertradegroup.com. And I kind of go over this pre-market, go over it during the day when I see things. Right. And I try to follow my trading plan in terms of some of the observations that I'm making. Enjoy the rest of your day.